Hi there, Serial Trader here. Let's check in with the major US indices. And we'll start off with SPX as usual. And today I'm going to go through all the various possibilities that I'm currently seeing applying the Elliott wave principle. And we're going to try and sort those into probabilities. That's what you try and do, looking for trade setups and basically trying to call the market and what to look for next, right? So we have this still technically valid count, although it's become greatly diminished in its likelihood. And that's that we have a big 1, 2, and now a 1, 2. And that will be down in wave 3 of 3 once we find a peak below this level. Has to terminate below this level, which is 2818. Now the reason this is starting to lose a lot of likelihood, well, a few things. It's gone well beyond the 78.6% retracement, which would already be considered a fairly deep retracement, and it's gone through that without really showing much resistance there. So there's that. It's also displayed a very clear 5-wave subdivisions along the way, right? So we have a pretty clear 5-wave move subdividing this wave up from the December lows. And if this is a corrective wave 2 in this interpretation, well, wave 2 can't be a 5-wave non-overlapping impulse wave. It could be a 5-3-5, right? So technically you could have the 5 up and then have a 3 down. And let me just adjust this degree slightly. Let's see, minute. So you could have this. Let's get the lines up there. And then back up for another 5-wave move. Okay, and this, now obviously at this point we'd be greatly out of proportion with the previous wave down. So, but just as far as the subdivisions, you could have the 5-3-5 as long as you terminate below the origin of what's being called wave 1, and that could be your wave 2. But again, this is consuming, well, this would consume way too much time to form this way for that to be the overall wave count anyways. So I'm going to do away with this for now, even though it's not completely invalidated until you take out that resistance level at 2800, just over 2800. But the subdivisions are strongly arguing this is not the correct wave count. So what else? Well, there's this interpretation, which certainly viable, although I'll point out some problems with it as well. And that's that you have your simple 3-wave move down from the all-time high to the December low. So 5-3-5, ABC down. And that's it. That's your correction. Simple 3-wave move down. And now we're already starting our next macro wave up to new highs. But even in that interpretation, it looks like we're very close to finishing the initial impulse wave off the bottom, this 5-wave advance. And then even in this, very, very bullish interpretation, you'd still be looking for a, equivalent 3-wave decline and equivalent in both time and price. So somewhere down into the Fibonacci retracement zones here. And also, if let's say we consumed a little over a month on this impulse wave up, well, you'd probably expect to consume, a similar amount of time to the downside. There tends to be time symmetry as well as price relationships. So that's what you'd be looking for. So even in this very bullish scenario, it would still require SPX to top fairly soon and come down in a significant way, even though overall it would lead to much higher prices as the pattern persisted. So what's wrong with this interpretation? Well, for one, and let me just clean it up a bit. For one, I don't like this wave down, this what's being called here intermediate degree wave C down. That doesn't look very good. Well, let's get this out. So doing some slope analysis, here's the slope of the A wave, if we want to call it that. Compare that with the slope of this wave, and this C wave is significantly sharper in slope than the A wave, which was like this, right? Ideally, you want to see a C wave, and more commonly, you'll see a C wave shallower than the A wave, not deeper. Also, it went well beyond the equality relationship, and it didn't quite get to the 618 relationship, but let's just go over that. So that's the equality relationship, so well beyond that. And typically, the most common relationship in an AC scenario, ABC scenario, would be around equality. So what relationship did we get to? Did we get to the 1.382? Just about. So that argues more strongly against it just being a simple ABC down, just because of that slope and also the depth of wave C in relationship to wave A. Although technically it's not invalid, but that is the strike against it. So this absolutely is a viable interpretation as long as the lows here at 23.46.58 hold. That is the absolute level that must hold for this interpretation to remain valid. Now, aside from that, this 5 waves up looks really good, and it does strongly argue that we should have some sort of requisite pullback here. And as long as it finds a higher low, then that would be a fantastic buying opportunity for another impulse wave up. So this interpretation, currently valid. It's not necessarily my favorite one, but definitely valid. But notice it still argues, any time basically that we peak and still have significantly lower prices before rallying again. So there's that one. Now let's move on to the next one. And this one's a little fancier, but it actually it works. It's certainly valid, applying the wave principle. And that's that we have this initial 5-wave move down in October for wave 1, intermediate degree wave 1 we'll call it. And then we had this A, B, C 3-wave move. So this is actually a little flat for wave A, ABC for wave A, so a 3-3-5 for wave A. And if you go into the subdivisions on the shorter time frames, you can certainly get a 3 out of this, a 3 out of this, and a 5 out of that. You can do it. So ABC for wave A, and then ABC for wave C, ABC for wave B. So you got an A, B, and then now coming up for wave C in 5 waves. So you have a 3, and then a 5. And this is, well, currently it would be considered a running flat. And that's where the B wave makes a new extreme beyond the previous extreme. But the C wave fails to make a new extreme, which is actually a signal of underlying weakness and would imply, a very strong drop afterwards. So this is a potential running flat. Now, if we extend it up here, let's just say we keep rallying, beyond what would seem reasonable. Let's just say we keep rallying up here in this little wave 5, right? Let's say we do something like this and just drop that down a bit. So let's say we get that and we actually go up and really extend up here in this rally and get beyond the origin, the origin of wave A, or I should say the extreme wave A. And then we would have an expanded flat, and that's where you have a 3-wave move up in A, a new extreme 3 waves down to new lows in wave B, and then a new extreme up 5 waves up in wave C. So that would be called an expanded flat. But as long as it stays below this level up here, so 2818, as long as it tops below that, this can still be, I'll just delete that channel there, this could still be considered a running flat. So that's certainly a viable interpretation. And I think it would be interesting if we actually did go up in this extended move we're in and broke these resistance levels, got everyone thinking, oh yeah, we're off to the races. And then we came all the way down and then some and took out the December lows. That would be very unexpected for most people. But in the scenario of the expanded flat, that is certainly a viable possibility. And also, obviously, in this running flat, if we do top out before getting to that December high, that would also bring us down strongly, right, in a 3rd wave down. So there's that to be looking for, and that is certainly a viable wave count at this point in time. Now, what else can be observed? Well, there's also this, and this is also another viable count, and that's where we have 535 and just for an ABC down, but it's not the entire correction. And then we have another ABC up, so a 535 fails to make a new all-time high, and then say we come down again, and bear with me here, say we come down again in an ABC to new lows, and that is a intermediate degree, and say we did a double zigzag. That would also be a completely viable count at this point, given the current information available. So there's that. Or this could be A B. This would eventually be a WXY. So ABC for W, ABC for X, ABC for Y, and it could even turn into a triple zigzag or even a different wave pattern. So there's a lot of different corrective patterns that you could be working. And this kind of leads me into the point. Let's see here. Yeah, I think that's basically the major wave counts I wanted to present. There's certainly others you can come up with, but those are kind of the ones I'm keeping an eye on. But I think the most important thing is to focus on the pattern at hand and not the overall larger structure, because from a trading perspective, all these nuances, they're not going to matter that much, for certainly even a swing trade. They're not going to have as much meaning. So what you do want to focus on is the current pattern. And the current pattern is we have some sort of significant low in place. It may not be the bottom, but it's certainly a bottom. And that was at the December lows. And we do have a clear 5-wave move off the bottom that looks mature. It looks ready to top out any day here. And who knows when it will actually top out exactly, but that's just something to be looking for at this point. The structure looks mature and it will find its peak. And after it finds its peak, there will be some sort of proportional retracement. Now, the real question from a trading perspective is, well, first of all, if you want to go short, this is certainly the time to be looking at doing it. Although I've already, gotten a little burned trying to get in too early. Although that's relative because, you only get as burned as you let yourself as far as position sizing goes when it comes to buying long options, in this case, put options. But what I am eyeing up here is if we can have some sort of a reversal day, some sort of sell signal. And ideally, I'd like to see it happen below, these resistance levels up here around 2800. If we get that, that would be enticing for me to sell some futures short and then have an actual hard stop loss against those previous resistance levels, and then have a very clearly, tight stop, defined risk, and then try and ride this move down. That's kind of the trade setup that's forming here currently in my mind. But also, if you don't want to try and do that, and that's certainly not the only way to play this, another thing is just simply wait, take no action here, just observe the market. That's probably a pretty healthy thing to do in most cases. Just observe, let the market find its top wherever it is, even if it goes up to 2900 or 2850 or wherever it finds its top. Again, I'm not expecting it to do that, but let's say it does, and then we finally get our move down, and say we come down from up here. Say we come down in a nice 3-wave decline. It looks good, just a simple zigzag decline. We find support where we should, some previous support levels here. We have good AC relationship, everything looks good. Okay, now that is finally a new fresh long entry with some clearly defined risk, good structure, and then looking for that next 5-wave move up, possibly to new highs, or in the other scenario I showed you, possibly just to a lower high beyond, from the all-time high. But that is kind of the trades that are shaping up here. Trying to short, the near-term top that's likely forming soon. That's kind of the immediate trade that's available, should one take it. And also looking for a long entry if it comes down the way it would need to come down for that to be the case. Now, again, more information will be revealed. So once we do come down, if we just come down hard and do not come down in a corrective way, but we come down very quickly and with a lot of volatility, and it looks like we're coming for these lows, well, in that scenario, you would want to be embracing, now where is that expanded flat, or sorry, running flat Let me find the running flat chart. Yes. So in that scenario, you'd be embracing this wave count, this overall structure, that of the running flat, or if it goes beyond the December highs, an expanded flat, then you'd really want to be, you know, swinging for the fences short, looking for new lows. But again, we're not going to know what kind of decline, and we know that a decline is coming soon, some sort of decline. The market's not just going to keep running hot indefinitely like this. But the question is, what kind of decline? What's it going to look like, right? So that's really what to be looking for at this point. And the overall structure, that's only going to be, you know, revealed once we have more price development. Once another several months passes by, we're going to find out whether we're in, you know, a true impulsive decline, or if we're in some sort of larger corrective structure, or if the correction is already done in December and this really is, you know, the first impulse wave up, and after the next corrective decline, we're just off to the races for new all-time highs. That's the information that's yet to be revealed, but given the information that's currently available, we got 5 up. Now we're looking at least for a 3 down, if not something more sinister in the more bearish scenario. But either way, looking for a peak at any point here. I know it looks like it's been trying to peak for a while, but now we actually have more clarity in this short-term wave pattern from the lows. We have a clear 5 up, okay? So there's only so far this fifth wave is going to run before it runs out of steam. And there's relationships we can look at and other things. But to me, it's already gotten past several important relationships as far as retracement levels and stuff. So now just wait and see. Let it find its own top. Okay, so there's that. Now, if we go to the Thinkorswim candlestick chart, there's some other interesting areas to look at here. And that is on this daily chart, we have the 200-day simple moving average, which we're basically right up against now, just slightly under it. And that comes in at 2741.78. We went as high today as 2738.98. So within a few points of the 200-day moving average. So that could be an interesting place for the market to turn and have a reaction from. We are still technically in a downtrend, especially if we form a high below the December high. I mean, the 50-day moving average is below the 200. That's, you know, the death cross is certainly in play. It would take quite a bit of time and price action to get that golden cross to really, I mean, it's a lagging thing, obviously, but that would certainly boost the idea that we're back in a new macro bull trend, but we're not there here. And so far, nothing as far as the sell signal has shown up on these daily candlesticks, right? So until we get some sort of sell signal and a close below the T line and start breaking, you know, the higher low pattern, even on a daily basis, we've just had nothing but higher lows and usually higher highs. So until something on the short term changes, there's really no sell signal to be had here. So that's what we're looking for on this, you know, signal chart, candlestick chart. Now, last week, I didn't do an end of the week video, so let's just look at the weekly candles. And last week, we actually did a bullish engulfing weekly candle, and now confirmation this week, well, with higher prices. So that was certainly a weekly buy signal, and here we've had follow through. Although I'm skeptical as to how much follow through, but we'll see. Now we're right up against this 50-week simple moving average. That certainly appeared to be an interesting place of interaction for the market before. Certainly provided resistance in this area, and we ultimately failed badly from there before. So let's see if once again that will be the case, right? Okay, so that's SPX. Now let's go look at the Dow Jones Industrial Average. Now on the Dow, we're above the 200-day simple moving average, although we certainly did that before here as well. So the 200-day moving average doesn't seem to have as much significance on the Dow as far as getting reactions off of it, but it's there, so leave it in place. So anything on the Dow below 25,980 will be a lower high, and obviously the Dow is doing basically the same thing as the S&P, and we have a 5-wave move off the bottom, looking mature. So the Dow really, you know, should peak along with the other indices. They should move more or less in unison at this point. The correlations are certainly high. But I'll point out on the Dow some interesting things. So obviously quite overbought here on the Dow. Now we have a gap here that never got filled yet. And then we also have a gap today that has gone unfilled. So a double gap up in the overextended territory here. The Dow is just screaming to come down and close these gaps. And that'll obviously happen once we come down in whatever pullback we get. But I do like that there are price gaps there, because price gaps, especially on a major index such as the Dow, ultimately almost always get filled, and you can be almost assured that both of these gaps will get filled, likely sooner than later too. So that's interesting to watch. Maybe the last little bit of exuberance gapping up in the already overbought condition. We'll have to see how this one plays out. Now the Dow on the weekly from last week, we did put in a weekly candle on the Dow as well. And yeah, we did a weekly bullish engulfing candlestick. And now we're above the 50-week simple moving average. But again, on the Dow, these moving averages don't seem to have as much significance. As you see, the 50-week is basically just in the middle of all this price range we were in. It didn't have the same kind of significance that it did on SPX as far as providing an area to get a reaction from. So again, the Dow just looking to set a lower high, ideally below this December high here, and have some sort of down move, and then we'll observe what kind of down move it is to get a better idea of how this overall pattern is forming, what's going on. And possibly, a great buying opportunity if it's a nice corrective looking pattern that sets a higher low, right? Okay, now on the Nasdaq composite. Okay, now on the daily. Oh, I believe we gapped up on the Nasdaq here today. Let's have a look. Just zoom in here. And okay, yeah, yesterday's high 73.48.23. Today's low 73.55.36. So yes, there is actually a little gap in price that went unfilled. So that's certainly an initial thing to look for once we start coming down, is at least starting to fill this gap. That would just be the very early signs that we're having some sort of down move starting. Now, the Nasdaq isn't quite at its 200-day simple moving average, although it's not far away. It comes in at, let's see the exact level here. It comes in at 74.54.2 right now, and we went as high as 74.0868. So we're not so far away on the Nasdaq from hitting that 200-day. Certainly an area that the market appears to like to go towards on the Nasdaq. So can't rule out a move up here before looking for some sort of top to happen. But again, on the Nasdaq, same idea. We do have a clear 5-wave structure off the bottom, looking mature. So certainly looking for it to peak, and then looking at the minimum for some sort of larger pullback. That's just the next thing to look for here on all the indices. Now on the weekly for the Nasdaq, okay, so last week was also a bullish engulfing candlestick on the weekly. Again, confirming this week with positive trading. But okay, interesting here on the Nasdaq. So let's dial this in a bit. So the 50-week simple moving average on the Nasdaq, that provided some very significant reactions, and it served as good resistance up until this point, and now we're right back at it again. So we'll see if we do find resistance once again, at least on a closing weekly basis, against the 50-week simple moving average on the Nasdaq. So that's something to watch. And okay, that's the Nasdaq. We'll go over the VIX now. Now on the VIX, VIX has broken its lows, although I wouldn't necessarily put too much weight into this. So our previous lows here on the VIX, we had the 1609, and then we had 1594, gone as low so far as 1504. So technically we have broken support on the VIX, although, I mean, as soon as the indices find a peak and start coming down, you're going to have a move up in the VIX. The question is just how much of a move. So interesting, the VIX does appear to be breaking, at least in some ways, this uptrend, although still not very convincing. Technically, you're still on the golden cross on the VIX, and you still have a rising 50-day and 200-day simple moving average. So despite the actual value of VIX itself breaking support, the overall picture here, I wouldn't say the uptrend is necessarily over just yet on VIX, but we are certainly testing the lower end of that range thoroughly here. So that's interesting. Probably, I mean, I'm already in VIX calls, which may or may not work out at this point, as they are good until February 15th. But probably not a bad time to be going into March or beyond with some VIX calls. Even if you're bullish, not a bad place to establish some hedges here against, you know, a bullish position if you have one. Okay, so that's the VIX. And let's have a look at the VIX VVIX tool, just to cap things off here. Now the VIX VVIX tool, still no signal. We've had a couple attempts here at divergences, but right now there's no divergence. VIX and VVIX just both made a new low with each other. You know, there was no divergence, and VVIX starting to move up a little bit more than VIX at the moment. Just kind of playing around with the moving average here. We're still well above the blue moving average here on SPX, which would be that confirming part of the signal. And that currently comes in at 2703, so just above 2700. So we're still on just a neutral signal here on this tool. It's not giving any signs for a sell just yet. All right, so to cap things off, there's certainly no official sell signals in place yet. As much as I'd love to put on some more bearish positions, I feel I've already got enough on at the moment, and don't want to put any more capital into play at least until I see a convincing sign that we're coming down. And also, there's only so much capital I'd want to risk on a single position in the first place, and we're basically there already. So right now I'm just observing, sitting on a lot of dry powder, waiting to see what happens. Certainly open-minded to, you know, if we come down and set up a nice buy-in, I'm certainly open-minded to going long once we have a nice pullback. But I mean, as far as a trade here, if you're looking for a trade in the very near term, the trade is going to be for, you know, a downside price move. But the question is, where's the top? Where is the top? And there's no way to know that with certainty. I mean, there's plenty of times here it looked like we could have had a top and it failed. But again, now I think there's more clarity now that we do have that clear 5-wave structure off the bottom. We know that we're in that last wave, that wave 5 of the structure. And any time now, if we just fail right here at that 200, that's fine with me. But I'm certainly open to the idea we could keep going, challenge the December highs. Anything can happen, right? All right, well, we'll check in if something interesting happens, but if this keeps just crawling upwards for the rest of the week, then probably no point in doing an update until the weekend or later. All right, that should be good for now. Serial Trader signing off.